Two ratings agencies slashing their outlook on Boeing. Let's get to Phil LeBeau for the details. Hey, Phil.
And Melissa, we should point out that this is an outlook change, not the actual credit rating. And it's coming from both Fitch and Moody's, both of them taking their credit outlooks for Boeing from stable, moving it down to negative. And they all basically say the same thing when you look at both of these notes. They cite a host of potential issues regarding the 737 MAX, whether it's can they deliver these or get these planes back in the air by the fourth quarter, as is the assumption. Will things have to be pushed out into next year, increasing costs, increasing financial exposure? And again, we should point out they are not lowering the credit rating of Boeing. Remember, Boeing reports earnings on Wednesday. Now, it was just last week that the company said you can expect the earnings to be reduced by at least $5 billion when they report their Q2 earnings. And again, that happens before the bell. The conference call with Dennis Muhlenberg and what analysts get to ask him, that's really the focus on Wednesday. Also in regards to airlines that have exposure to the MAX, don't forget that American, it has 24 737 MAXes. It will be reporting earnings on Thursday morning. We'll be talking with Doug Parker, CEO of American, not only about the MAX, but really where this airline is as they head into the second, or they fly now in the second half of this year. Melissa?
All right, Phil, thanks. Phil LeBeau in Chicago for us. Let's trade Boeing. First of all, I mean, one of the points that at least Fitch was making, Guy, was that operating margins would be impacted for years to come.
I'm not surprised. I don't think it's going to be for years to come. I mean, maybe I'm wrong. Fitch should know better than I would think, but I'm hard-pressed to believe it's going to be for years to come. I think Boeing will rebound from this, and I understand the stock was down today. It makes sense, especially given the bounce. But I'll say this. The rating agencies historically have been late to the dance, and I think they're late to the dance on this one. I would still favor being long Boeing here than short it or not position at all.
But the risk to Boeing here is that this delay goes on for longer and longer, and people just go and order elsewhere. We've already seen several airlines go and switch some orders, and that is the risk here. Not only that, we don't know what other kind of investigations are out there. There's been a lot of stuff out there. So just buying the stock, I think you're subject to all these headline risks that I'd rather not be subject to.
Which brings us to the question of how do you trade stocks with headline risks? We saw a couple of instances, even just in today's news, Johnson & Johnson heading to court over talc cases, alleging that talc and talc products cause ovarian cancer. We have the Equifax settlement, $700 million with the FTC over the huge breach, the privacy breach, Karen. How do you separate what is worth taking pause and what is worth sort of putting stock into?
So it's really hard to know ultimately, but I look at something like Boeing, and obviously we've had tons and tons of bad news, and at some point the market just gets inured to bad news. It stops going down on news that a month or two ago would have really been negative. So this credit news today, I really look at as really not important to the Boeing story, because this isn't a credit story. Maybe their margins would be impacted, but still, that wouldn't. I don't think the credit story is important here. I just think it's sentiment just gets sort of washed out. And we saw it in Facebook when they had bad news and then more bad news. And then more recently, they had what would have been bad news, the FTC settlement. That actually was a positive, but they had, there was, I forget, 100 million, a very large number of accounts that they had been exposed to, I don't know who, but that, I don't even remember the news exactly. There's my point, that at some point the market sort of gets, they're tired of hearing bad news and reacting to it, and we've seen it. We saw Facebook bottom. We saw, I think Boeing bottomed a month or so ago.
Well, how about a case like a Johnson & Johnson, where talc is a tiny percentage of revenues, and yet we did see the stock move lower to December, and we're back to those December lows.
But I think it's a company that people were struggling with. Their not only just their consumer products business, but also their medical products business, and then their pharma pipeline. I've made the argument recently on the show that I like J&J relative to their big pharma business relative to the peers, because they're growing high single digits. That's something the other guys are not doing. I think both of these companies, back to your original question, in an environment where you're worried about global growth, these are both very defensive companies with fantastic balance sheets, and I think you gravitate towards them until the news flow changes from here.